how to find and close your first or next multifamily deal. So we'll find out what are the steps as a new investor need to take to close their first, find and close their first multifamily deal. First one is like identifying goals. Everything starts with goals. You have to identify your 1 year, 3 year, 5 year, or 10 year goals. Next one is why real estate. There are multiple reasons why we need to go with real estate. Cash flow, residents pay monthly rent, which covers all the expenses and generate excessive income and which can be distributed to investors. Next one is property appreciation. For a period, like property value will be increased, and again real estate is very hyper local and each market it is different and values also different from each market. Next one is tax benefits. Owners can enjoy the tax benefits of owning real estate and can use bonus depreciation and cost segregation to make more profits. And also impact investing, an investment strategy that generates financial returns, also creating social and environmental impact programs, and also beat inflation, earn more profit inflation with multifamily real estate. Multifamily has a long track record of beating inflation. And value add, so we can purchase underperforming assets and increase proven value add programs like improving management efficiency or performing renovations and increase rents. Now coming back to why multifamily. Multifamily fundamentals are healthy and rental demands remain strong and historically less risk and better returns than stocks and bonds, and tax benefits. Home ownership is significantly dropping and population is significantly increasing. And there are some other advantages with multifamily. We can go with a non-recourse loan compared to recourse loan, and also we can bring in like third-party property management or in-house property management and bring full-time property managers or maintenance persons. From scalability point of view, it's a good way to scale multiple units in single location. And number of loan restrictions also another advantages. So single family side there are some restrictions, maximum can get 10 loans, whereas commercial loans there is no restrictions. And also we can leverage other people's money or other partners money. And next step is identifying your criteria. So as an investor, first step you need to identify your criteria, like type of assets will be targeting, like class A, class B, or class C or class D kind of multifamily properties. Then next one is location. Location is very important. So you need to identify which location you're planning to invest. Like there are 4 types of locations: class A, class B, class C, class D locations. Next step will be like identifying size of properties, like 5 to 20 units or 20 to 50 units, 50 to 100 units or 100 plus units. Next one is vintage. So you need to identify what vintage you're planning to target, like before 1980, after 1980, 90s or 2000s or new products. And also like there are different criteria selecting some markets or sub markets. And next step is identifying markets. Once we define criteria, then we need to identify markets. There are so many markets in USA, so we need to identify markets based on job growth, population growth, or supply demand, and landlord friendly or different factors. And real estate is very hyper local, each market is different. There's so many good markets, so we need to pick at least 3 to 6 markets where these above mentioned parameters are good. Once we identify a market, then next step is focusing on deal. There are multiple ways we can find the deals: on market and off market. On market mainly we'll be working with commercial brokers, also they can share sometimes off market deals also. Other one is off market deals, so directly we can work with sellers. When you start working with this broker, they will share the specific deals, operating memorandum, T12 and rent rolls. So once we have that, we need to start underwriting the deal. So we need to plug in all existing T12 income and expenses into the model, and also current average rents and projected average rents with organically or with post appreciation or after executing business plan. Once we underwrite the deal and if it makes sense, if it meets our criteria, like from cash and cash point of view, IRR point of view, or AAR point of view, the next step will be submitting LOI and signing PSA. So we'll be submitting LOI to broker by entering different details like offering price or purchasing price from buyer's point of view, and also a due diligence period and terms and closing period, any contingencies, all this stuff will be entering in LOI and then submit to broker. So if seller is okay with the terms like pricing point of view and also terms point of view, then next step will be signing PSA. So it will take like at least a couple of weeks for signing PSA. It will go back and forth between seller and buyer. Once we sign the PSA, next step will be, as a buyer, we will be performing some due diligence. Normally like 30 to 45 days time we'll have, and during that period we'll be doing different kinds of due diligence like physical due diligence, legal due diligence, and environmental due diligence, and lease audits, existing leases. If we are okay with all the due diligence and if we are satisfied with all the due diligence, we can move forward with deal. During the same time period, we need to parallelly execute a loan within our lender or broker by submitting application and different information. And also same time, so we need to raise some capital for remaining down payment. So for that, we can partner with experienced operators or we can raise capital from the investors. Once we finalize all these steps, then we can close the deal basically. That's it. Once we close the deal, we will get all the keys from the current seller. Then we can bring in third-party property management company or in-house property management company. We can start executing our operations. So the key for the main steps here is optimizing our operations by improving efficiency, any management issues, or renovating units and increasing rents and increasing overall net operating income by increasing income and reducing expenses. And next, once we execute business plan, next steps will be like we can refinance the deal or we can sell the property based on overall returns from investors point of view. And if you need any help and any support of finding your first deal or next deals, you can reach out me.